you don't go through the last 2 years for no reason at all. And I think the reason or the purpose of the last 2 years was ultimately to change the leadership. Now, I'll fully concede old habits die hard here, and there's been a move back to some of these names. But just keep in mind, the last 5 or 6 weeks, as money has come back to big tech and growth, it hasn't been monolithic.
Right.
Apple's been good. Microsoft's been good. Amazon and Alphabet, not Valve. So there's been a split here. And I also think when we look at some of the rallies we've seen in Meta off the lows or Netflix off the lows, I mean, we're back to now where these stocks broke down from. So there's a lot of bodies that are buried in that neighborhood where, maybe it's time to back away from some of those.
Yeah,
moves.
each one of those had their own, nasty comeuppance and have come back from it just a bit. So Epic, we teased here, and just what's the framing here of why this sort of stock is working?
The framing here is when you're going through these big regime or paradigm shifts, the irony is most people will spend their time and their capital trying to retime their entry to the old leaders at the expense of missing the new leader. So what does Epic mean? Eaton, Parker Hannifin, Illinois Toolworks, Cummins Engines. These big machinery names that have largely spent much of the last decade on the sidelines, certainly the last 2 or 3 years on the sidelines. Those are the stocks right now making the new all-time highs, making the new relative breakouts. So not only were they leadership last year, particularly the second half of last year in a down market, they're continuing to set the pace this year in an up market. That sounds like leadership to me. That's where I want to focus my time and my capital.
Is it somewhat narrowly unique to that subset of industrials, or are there other cyclicals that seem like they're also in a similar position?
Well, I would say more broadly, it's not narrowly unique to the U.S. In fact, it's actually more pronounced when you start looking in other geographies around the world. I mean, Europe is a much more industrial-heavy market. I think it's interesting. You have the FTSE 100 at a new all-time high, and you have the CAC at a new all-time high. When can you remember in your career UK and France making new highs before S&P or triple Qs, right? Then you look at some of the Japanese industrials, the steel names, the machinery names. This is a big story. I think it kind of transcends borders here. It's not just a U.S. story. It's geographic, and it's where I want to be spending time and capital.
Yeah, and it seems probably not even just related to the next turn in this cycle, right? So it seems like there maybe is something bigger.
I think it's always our goal. We always say we want to find the stocks that look like Microsoft did in 2012, right? When Microsoft was coming out of the big range and no one believed it. And I think, as a great example, there's still, I think, 65 analysts that cover Amazon. There's 21 that cover Cummins Engine. That's going to change. And when you look at what the future may hold here, I'm not so naive to think that in some recession in 2024 that these stocks are going to be sacred and not go down. The reality is everything goes down in a recession. But what comes out on the other side faster? It's your secular leaders. For a long time, that was tech. I don't think tech behaves that way here. I think the market's telling us these are what your best chances at identifying the new leaders are.
Real quick, wanted to get you on Treasury yields because you have been focused on the likelihood that they don't really come down very much, and now we've resumed an uptrend.
Well, what I think is remarkable is that this term disinflation that we've heard now for 5 or 6 weeks is being confused with the call on yields. As it stands today, 10-year yields still trade at a major deficit to headline inflation. That's unusual historically. Let's pick a number on CPI this year. You could convince me CPI goes back to 3. So why can't 10-year yields be 4, 4.5? That would not be abnormal relative to history. So I don't think this popular word disinflation is necessarily the investment conclusion about rates many think. And the last point I would just make here, the move we've seen in rates, I think the dollar bears have to question whether the dollar bear call can withstand this move higher in yields. There is one-sided thinking on dollar. Intellectually, I get it. Intellectually, I'm a dollar bear, but I can't ignore the price action, and there's a one-sided move there.
Yeah, we have seen that, a nice bounce. Chris, great to see you.
Thank you.